Most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone. I just want to share with you a report we have just put out. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to 2022wakeupcall.com. Again, that's 2022wakeupcall.com. Hi, this is Daniela Cambone, and welcome back to Stansberry Research this Monday. Well, the downturn in cryptocurrencies has seen more than 1.5 trillion wiped from the market and is leading to warnings from analysts that another crypto winter, similar to the one we saw in 2018, may be underway. Here to help us and guide us is Gareth Soloway. He is the president and CFO over at inthemoneystocks.com and verifiedinvestingcrypto.com. Gareth, always good to see you. Happy Monday.
Hey, happy Monday. Thank you so much for having me back.
Well, it looks like your call back in the day that gold would be outperforming Bitcoin and the S&P this year is on track. I know some people rejoicing, others not. So much ground to cover with you today. So let's start with Bitcoin, which has managed to bounce back after crashing to an 18-month price low over the weekend. Gareth, what is going on?
Yeah, so wild movement in crypto markets, wild movement in stock markets. I mean, bonds, we know the bond market has been crazy with yields. But bottom line is, when you look at the crypto market, it did exactly what it should have done. And I know that sounds weird to people, but the charts really give us insights. They give us the probabilities to kind of decipher what the likely outcome is. And I remember last time we talked about this bigger down move from 69,000 to about 33,000, and then how you got in this sideways choppy kind of consolidation pattern in cryptocurrency. And that's, if you look in a textbook, that's a standard bearish, channel pattern, bear flag pattern. So what that tells you, and by the term bear, we know that more than likely it was going to break down. It did just that, and it came down sharply, basically tagging 25,000 on the charts. Now, one thing I will show you, which is just so cool, and this is just how cool the charts are, but if we go to another channel, and I love my channels, as you guys know, and we flip over to it, and if we just connect this high through right here to this high and this high, so basically the last 2 highs, and if we just draw a parallel down, look at what you got here. Like, where did Bitcoin stop falling? Right here at the lower end. And look at that hit, and that hit. So it's amazing how these charts show us, but I actually ended up going long on Bitcoin right down here just for a trade. Again, it's not a long-term investment, but just for a trade based on the fact that we hit this lower end of the trend.
Okay, so few questions here. And I just want to say, Gareth, I applaud you because you took a lot of heat. You've come on, months before this crash happened, calling for $20,000 Bitcoin or lower. The cyber horns came out after you saying, it's impossible, not going to happen. So my question to you is, what's your target now? You had said 20,000 or lower, possibly 10,000. Are you sticking to that? Is this the bottom or more bad news coming?
Yeah, so right now nothing in the chart has changed. So 20,000 is the high end of my target. And again, just to understand where that's coming from, it's coming from the 2017 high. I believe that we have to get back there. We have to retest it. The idea here is that we're going through this first time ever for cryptocurrency where, the Fed is hiking rates substantially. They're sucking money out of the system. We've never had a period since Bitcoin's inception where there wasn't some sort of QE going on, right? Well, now they've sucked that out. They've taken that away. They're reducing their balance sheet and they're raising rates. So it implies that we should have a bigger correction than usual. The other thing that I'd love to show you guys is 20,000 is the high end of my target. The low end is actually down at 12,000. And the way I'm getting that 12,000 target, if I make this chart here zoom out properly, is basically if you look at this move down from 69,000 to 33,000, that's basically a vertical drop of $33,000. And if you take this high here at 48 and drop that same 33,000 down, which is what's called a measured move in technical analysis, you get $12,000. And what's even more fascinating is that if you look at previous cycles like 2017 when it topped out until till the end of the bear market in 2013, Bitcoin corrected 80 to 85%. Well, guess where 80 to 85% is? It's right around 12,000. So 20,000 is my high end and 12,000 would be my worst case scenario correction on Bitcoin.
12,000, sorry, and what time frame could we see it go that low? Would it just happen quickly or over a few months? How fast does that happen?
Yeah, past cycles usually from the highs. So if you go back to November of 2021, it's 12 to 18 months. So we're already over 6 months into that, which implies give or take around 12 months more until we reach the bottom. But I do think that what'll end up happening is it'll be when fear gets to that level. We know fear is very pervasive. It'll be a fast move down, and then my guess is you'll get a bounce off that lows, but it'll chop around after that for a while until the next bull market takes over.
Okay, so the question I'm getting, and I'm sure you're getting, and I know you're not here to give financial advice, but folks who do have a large position in Bitcoin, and if they're hearing this forecast of 12,000, they're saying, should I just get out now?
Yeah. Yeah, so and it's such a hard question to answer because I think it's important to be clear is that I do not have a magic 8 ball or a crystal ball. So, there's no guarantees it goes to 12. I mean, heck, there's no guarantees it goes to 20. So what I generally recommend at this stage, now that it's down from 69 to 29 or so, is that you start thinking about, okay, I missed selling at the highs. That's one thing, you can't undo that. Instead, think about, do you still believe in the long-term cryptocurrency story, the long-term Bitcoin story? And if you do, then what I would recommend is dollar cost averaging slowly. Nothing crazy, but every $3,000 or $5,000 down, have a standard amount that you've already set aside and say, okay, I'm willing to put a little bit more in to bring my
Ah,
overall average down.
okay.
And this way, you'll have that exposure. If it just goes to 21, doesn't even get to 20, you're exposed. If it goes lower, you get a lower average. I think that's the
Okay.
play at
So,
this stage for most
well,
people.
I was going to ask you because, the Bitcoin pundits will just spin this as saying, well, just see this as a buying opportunity. And I know that's always the positive that we like to put on things. And I'm not just saying with Bitcoin, it's whether you talk about gold, silver, whatever. So you agree that it's not necessarily a disservice what they're saying, that if you still believe in the long-term case for Bitcoin, this would be not a bad place to get in.
Yeah, yeah. If you believe in that long term case, and remember, you always have to reanalyze that. What I suggest is every month re-asking yourself, is the thesis still valid? And as long as it is, then I think overall, and I do believe in Bitcoin longer term, I think that you will be rewarded if you hold and you hold through this pain. But I think it's also important to understand is that in 2017, when we were at the lows, people were talking about Bitcoin not surviving. And you have to be ready to weather that emotional kind of nature that's going to be very, very inbred in a lot of people. You're going to see people writing crazy things on social media, and you have to really be able to block that out and stick with your thesis unless it changes.
So, how much of this is due to the shock therapy that we're seeing from the Fed, Gareth? And do you think that certain myths are being busted right now, like the fact that Bitcoin shines in times of inflation?
Yes, yeah. So that was always a myth, right? That it shined in times of inflation because we never really had inflation since the beginning of Bitcoin, right? It was always 2% or lower until now. And you've gotten in a scenario where I do believe long term it is the digital gold. I truly do, and that's when I will accumulate a large position when it gets low enough for me. But I think it's also important to
Yeah.
recognize that, Bitcoin's been around since 2009. It's only a 13-year-old. And think about it in logical terms. Like for those of us that have kids, is a 13-year-old thinking logically, or are they very erratic, right? It's not mature. Like the gold market has been around for thousands and thousands of years. It's very mature. You don't see big moves in gold, maybe 1% here and there. It's a very mature market. So eventually you will see Bitcoin mature into a much more stable market. But right now it's still being bought and sold by people panicking and being greedy and all this craziness. And it's still a very young asset.
Right, right. It just makes me, when you said that, I just think of gold as grandparents, and sometimes
Yep.
grandparents know best, right?
Yeah, that's right.
Um,
Absolutely.
Okay, this is all happening, the correction in the crypto space, while El Salvador is hosting 44 countries today to discuss the merits of cryptocurrency and the benefits of adoption. Could this event not have come at the worst time, you think?
Yeah, I mean, it's definitely going to make when you have big movements like this, it's very hard for countries to say, okay, let's adopt it as a
Right,
currency for us.
right.
Because again, if one day it's worth this and the next day it's 20% less, well, again, how do you make sure that the exchange rate and what people are buying with it? I mean, it just gets very, very messy. So this is again, something that I think is a positive step in the right direction. You want people talking about it, you want world leaders talking about it, but at the same time, it needs to calm down before we get to those next steps.
Okay. I don't want to stay too long on Bitcoin because I know we have a lot of other stuff to get to. But how long, and I know I've asked you this in the past, but the people want to know how long does this winter, how long does the pain last? How long must they endure this?
Yeah, so I'm in the camp that all we can do is look at past cycles. Now, again, it's important to understand that this is not necessarily like a past cycle in Bitcoin or a bear winter or a crypto winter because we have the Fed doing what they're doing. But in general, 12 to 18 months from the highs. So I would again say generally another 12 months. The only kind of caveat here is, and this is my one worry, is that if you look at Amazon in the dot-com bubble or the Nasdaq after the 2000 collapse, it actually took 15 years for the Nasdaq to take out the dot-com bubble highs. I really hope that doesn't happen because that's a
Jeez.
really long time. But as a technician, it's important to look at all angles, even the ones you don't like or you don't believe in, just because you have to be informed. You have to know all this stuff. It has to all go into your algorithm in your brain about your decision making.
Yeah, okay. It's really tough times, but let's move on. I want to talk the Terra coins, okay? Terra Luna and Terra USD, just absolute destruction. And speaking about myth busting, stable coins not so stable. Can we bust that myth?
Yeah, man, and by the way, I think that what happened with the UST, the Terra Luna
Yeah,
stablecoin, it's such a disservice to cryptocurrencies because everything about crypto right now is trying to get people to trust it, to adopt it,
right.
and when you have these situations, it is very, very bad. I hope that good things can arise from this, meaning that you do need governments to come in and have some sort of regulation to prevent things like this happening again. And I think that could be a long term positive. Maybe something like this needed to happen to get that regulation going. And I know a lot of people in the crypto markets are like, oh, I don't want any regulation. But you have to. If you ever want it to be a dominant force in assets,
Right.
crypto needs forms of regulation. For instance, like one of the biggest things to me personally as an investor is that in an investment account where I trade stocks, I'm FDIC insured. In a bank account, I'm FDIC insured. You don't have that in crypto accounts. So if someone, hacks in or makes you click a link that they steal your money, it's gone. And that is very disconcerting for people like me that I want to put a lot of money in, but I mean, God forbid I click a link by accident and someone just takes my money and runs. So you do need the right steps to be taken here. And when that happens, I'm hopeful that that's a positive.
I mean, just a few months ago, they were enjoying this honeymoon phase, and it's like,
Yeah.
what happened?
Yeah, I mean the Terra Luna collapse was insane. To see one of the top cryptocurrencies go to
Yeah.
now hundredths of a penny. But again, understand what they do, and this is actually an important point because a lot of investors are like, oh, let me buy it down here. I mean, people were buying it at 10 cents, thinking, oh, this is a great, it's going to have a snapback. But please understand, they're doing the same thing as they do with stocks, where they dilute, they issue shares to try to shore up the UST, the stable coin. And so basically, I think you went from like 300 coins of Terra Luna to like billions and billions and billions. And so it's very hard for a stable or for Terra Luna to actually bounce back significantly when they're just printing more and more of it.
Do you think this just builds the case that if there is one cryptocurrency left standing, it's just Bitcoin?
Yeah, I mean, I think that again, that's the one that most big money and institutions are focusing on. I think Ethereum has that shot as well
Yeah.
because it's the biggest one. But I really truly believe that it's going to be a healthy thing to happen. But you have to see 90 to 95% of all cryptos wiped out. I mean, think about the dot coms, think about what went on there. So many crappy dot com companies got crazy valuations. Eventually, they kind of went away. And then the best of breed, the Amazons, the Googles, the ones we always talk about that are the biggest companies in the world, they're the ones that survived and then they thrived because there was less out there for investors to go into. And I think that's very key for cryptocurrency. It's almost like a rite of passage for any asset. It has to go through this wipeout and then the best kind of come out of it stable.
Gareth, if you don't mind, let's pull up Ethereum. You mentioned it,
Yep.
um, down 50% on the year here as we're speaking.
Yeah, so I mean, I have some trend lines here. Basically, I bought off of this lower range right down here based on
Right.
major support. This upper line is resistance. You can see we just kind of kissed it and pulled back a little bit. I do think Ethereum has more upside, likely back to about 2,500 in the near term over the next week or two. But again, I'm in a position where I'm looking at a bigger breakdown on the chart, and this is very problematic. And let me draw this trend line in for you guys. Is this trend line was such a good trend line until it broke. So see how for basically going back to early 2021, you kept on hammering and hammering and hammering, and then it broke. And once a trend line like this breaks, it's very hard for it to get back above this range. And ultimately, it may have bounces, but then the next leg lower comes in. So unfortunately, I mean, at a very bare minimum, just like Bitcoin going back to the 2017 highs, I'm in the camp that you're likely headed back to about 1400 at minimum on
Oof.
Ethereum.
Do you think, and maybe we're still years away, but if we were to see a Bitcoin spot ETF, could that save the market?
It won't save the market if we're in immense fear because fear is the most powerful emotion. But I do think that is one step in the right direction for beginning to build the next bull case to new all-time highs. Meaning that
Mm-hmm.
you definitely if you can buy an ETF that is on spot, so it doesn't have the flip overs of the future contracts and have losing value and stuff like that, then you can actually buy these cryptos in a way in your investment accounts and have that FDIC insurance and have that security and be tracking Bitcoin one for one. So I think again, if you're in this crazy period where the stock market's still collapsing another 20-30%, if crypto's still going down, I mean, yeah, you might get a short-term bounce, but that fear is still going to be there. But if you can get through that period, then that is the next stage towards upside.
Gareth, I want to talk gold now with you. Like I said at the beginning, that was the best performing asset. This is what you're going on the record for in 2022, going to beat the S&P and Bitcoin.
Mhm.
And I had brought up a chart in my last interview with E.B. Tucker, which, because we don't really, Wall Street doesn't really talk much about gold, but I showed a chart going back to, March 2020
Mhm.
of basically how gold has outperformed the S&P, basically lapping it. But we don't talk about that.
Yeah. Yeah, and you're right about that. And I think even one thing to mention about you're 100% right that gold is doing great. And number one, it's outperforming this year. I mean, think about what the Nasdaq is down this year, Bitcoin is down, and then gold. It may not be up a ton this year. It's up a very
Well,
slight amount, but it is certainly positive for the year. And that's even after a pretty dramatic pullback here
right,
recently. But
right.
but I think it's yep.
No, no, not to cut you off. Sorry, Gareth. That's exactly the point I'm trying to make is that it doesn't seem like it's doing much on a day to day, but if you zoom out, it's done pretty well,
Yes.
comparatively speaking. So,
It absolutely has, and I would even say it's done even better due to this factor. Look at your DXY. Your DXY, the dollar has been ripping. All right, from down here, just going
that's
back to
right.
mid 2020. So basically, the last year, the dollar has had a massive currency move, which is usually causes gold to go down, and gold's actually held up beautifully, in fact hitting that 2020 double top. So even in spite of that, gold is actually performing very well. And what you've seen here is gold broke out. So I think last time we talked about this breakout, and then I think I even said it was likely going to retrace to what I call the scene of the crime, which is the breakout trend line. And look at this, just in the last couple days, gold has done just that. So I've actually added to my gold positions just in the last 24 hours on this premise that this is a very kind of normal retrace before the next move up. And I love kind of explaining it in terms everyone understands. So think about a child, right? A child's at home with their parents. It's kind of, it wants to go out on its own. It wants to go out on its own here. It doesn't do it. Finally, it starts to make more headway, right? It's like, I really need to go out on my own. I'm getting older. It finally goes to college, but what do we know about kids that go to college? I did this. I'm always coming back for Christmas and the holidays, right? So it comes back for Christmas and the holidays, and then it goes out. Eventually, it gets its own place, you know, and it starts living on its own. So very normal retrace going on here in gold, and it should start its next leg up here soon.
You know what? Could you overlay the Bitcoin chart with gold just so we could see?
Yeah, let me try to do that here. There we go.
Yeah.
So yeah, you can see Bitcoin underperforming. I mean, quite immensely.
Well, that chart basically speaks for itself, but I hope, you know, we all hope good news is coming for the cryptos and they can turn this around. I guess if a final chart, just if we could pull up Amazon, because a lot of folks, you know, wondering if the cryptos are just following the trajectory of these stocks.
Yeah. So I think that's very fair, considering cryptocurrencies are a risk asset still. They haven't matured into a longer term kind of stable asset. Then there are following. And I mean, the fall on Amazon has been tremendous. But what's cool about Amazon is look at where it went. I mean, you could see how this was kind of a major level, and that's exactly where Amazon went before you bought. And what's amazing about this is as a trader, you start to tune out the emotion and the media and all this other kind of stuff because it actually affects you in terms of what you do. When you look at something as pure as a chart, it really gives you the beauty of saying, okay, well, this is a major level in history, so this is where it should bounce, and it does just that. And I think that's such a cool thing to kind of just be aware of. And if you would just give me the ability, I would love to show one more thing, just going back to Bitcoin.
Please.
Let me show us. So here's your Amazon chart, and here's that same pattern, right? And this is kind of like, I always like doing this because, you know, I talk about so bearishness on the cryptocurrency and how it's going to go lower and maybe 20 or 12,000. But here's that M pattern that Bitcoin has, but this one's on Amazon in the 2000s, the 99 2000s. And then if you zoom out on it, look at how tiny it is comparatively. So here's that little pattern down here, and then look at what Amazon does. So my point is that during bear markets, you have to go through a lot of pain. But if something really does have sticking power, and we know Amazon certainly did, and hopefully Bitcoin does, there is light at the end of the tunnel. I mean, $6 was the low in 2000, and here it hit a high a year ago of 3,800. So incredible movement.
Gareth, definitely crazy times. Thank you for joining us today. Any final thoughts for viewers out there watching?
Just remember, right now we're in a Fed-induced bear market. Eventually, I think a recession later this year into 2022. So bounces should probably be selling opportunities, both for crypto in the near term as well as stocks. Lots of opportunities because we get wild swings. But again, you have to be a nimble investor at this point. The days of buy and holds with 3% pullbacks because the Fed was always there to rescue, at least in the near term, are over. You have to recognize that. The faster we recognize it, the safer we will be.
Really well said. I could not have said it better. Gareth, it's always a pleasure having you on. Thank you so much.
Thank you, Daniela. Have a great day.
You too. And thank you all for watching. We'll have much more coming your way, so be sure to stay tuned to Stansberry Research. And don't forget to sign up for exclusive content you can't get anywhere else at danielacambone.com. That's it for me.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.